Okay, if you look at the headline, you see that Unilever paid over 18.67 billion in dividend, but their net profit for the year was 15.6 billion. So here is the gap. That is what you are gonna find out. So like always, we have 4 charts here, so you can always open it up and look at it. This is the price chart, this is the income statement, this is the balance sheet, and this is the cash flow. Then with supportive analysis of what happened, what we found out when digging deep, the evidence backing up this finding, and finally what to watch going forward. So these are the 3 theses. We break our free research here, but the premium one goes into further detail, but this can give you a head start into it. So let's go in. First of all, this is the price chart of Unilever. So you can see how price has toppled over the years. There was a time in 2013, price was trading above 60 naira. It dropped for people that bought here, maybe 2013. They needed to wait up to back to 20 after close to 6 years to get even close to their entry, but still they didn't make money. They needed to wait close to 2025. That's from 2013. That's 12 years. So what are we saying? We are saying that this is the disadvantage of you buying at any price. Every month you are buying a particular stock, dollar cost average. We are not saying it's bad. It only makes sense when there is a valuation behind this. So that is when it start making sense. If not, you might be buying at the highs, like some of people are doing currently, and at is wherever is in, they are still dollar cost averaging without looking at the valuation. So that is why valuation is important. So let's look at the income statement. So for income statement side of things, you look at everything is looking up. We look at the revenue green by 22.2%. Look at the operating profit, midline growing to the bottom line, which is the profits after tax and stuff like that. All of them grew very well. If you look at the margins look pretty okay. The only margin that dropped was the net margin as a result of we had higher finance cost led to this drop, and then the coverage also dropped because of more financing, and the earnings per share, everything looked up shit. So we still balance sheet, the asset dropped by minus 1.6%. Then the equity side of things too, you see that the return earning, this is where we talk about this return earning was passing into their return earning. We are still going to talk about it in detail. So let's now go to side of things. For the free cash flow, they had a negative free cash flow of over negative 1.1 billion naira, as compared to by this time last year it was 16.57 billion naira. So first behind the numbers, which is the most important part of the things. Number one is like the earnings, where they actually grew by 1,000%. You don't know what grew their revenue. They can even sell a property and book it out. They can even have an FX evaluation. They can even some of their equities holdings. So these are the can feed into revenue. So it's always good to know how clean the revenue is. So of course the revenue was predominantly operation. That means the money they made came from their core business of operation, which is very good. Then the next thing to know that even though there was FS distortion, but it didn't affect it in a negative way. That's in such a way that even if when you strip it off, they would have had a better middle line, which is the operating profit side of things. So which is interesting to know. Then for the segment side of the business, remember they have many segments: food segment, personal care, beauty, and well-being. All of them did very well in terms of margin returns, but we have the one that is carrying the business, which is the food. The food segments did over 13.6%, followed by beauty and well-being that returned a solid performance of 21%. Then it was personal care that flattened out. Personal care stood at 4.7%. Then for the dividend, like we said, the dividend was paid from cash was drawn from the balance sheet to make up and pay the dividend. And also it's interesting to know that they booked a revaluation loss in their cost of raw materials inventory side of things. So it also brought down the margin of the revenue. If not, it could have added more to it. And finally, for the currency side of things, they said they are hedging for currency exposure, but they still booked an FS loss of 1.33 billion. So the question, we now dive deep and found out that the hedging was not covering the bank balances. The hedging was only covering their transactional cost. So it's interesting to know if they can broaden out their hedging so that it can cover up and hedge these stocks very well. So that is it about Unilever. Remember to subscribe, go to the YouTube channel, download these graphics. Sometimes there might be some analysis that we might not post on YouTube, but we cover them on X. So that is why you must give us a follow on X so that you can get this analysis. Sometimes this analysis will be out after 1 week before we start making the recording and the video. So, but if you want to get it in real time, faster and stuff like that, always come to X. And remember, you can comment, ask your question anywhere. X, WhatsApp, wherever it is, YouTube, the team will always reply you. So till then, stay invested.